doesn't matter. It doesn't matter. That's it. Hey everybody, I'm Bernie Gartland, and this is the IRS Fix, brought to you by the Gartland Group. And I'm Bernie Gartland, and Tim Berry, who's also a tax attorney. We're going to talk about retirement plan key points. Now, if you are self-employed, and you're self-employed because you don't want to really work for the man, but you're sitting there saying, well, if I'm self-employed, what kind of business deductions and what kind of retirement plans can I put together for myself and my family? So we're going to talk about that. Now, Tim.
Yes, sir.
If we have a self-employed person, how can he get current tax deductions from being self-employed?
There's a multitude of ways you can get the current tax deductions for being self-employed. We talked last week on what?
We did, home-based businesses.
Yeah, paying the kids with the home-based business.
More money. Now
right, you're
there
singing my tune.
Right.
Absolutely. So that's one really simple way. Other really simple, easy way, retirement plans. We all know about IBM, Microsoft, all the big corporations, all the big muckety-mucks. They have their 401k plans. Well, there's nothing in the tax code that says these 401k plans are only for the benefit of the big muckety-bucks. Even your sole proprietorship could have its own 401k plan. And now, come tax time, you want to get some quick and easy tax deductions? You just make contributions to your own retirement plan.
Now, what about if you are working for the man, but you also have a self-employed business on the side, and you're making money, and you're sitting there and saying, you know, my company doesn't offer any retirement plans. How can you utilize being a W-2 employee with your self-employment for contributions for your retirement?
Well, let's walk through that. And I think if we were to boil that down, it would be, could you participate in more than one retirement plan, or can you participate inside your self-employed retirement plan if you're working for the man?
You know, that's the way I was going to ask you that.
Bernie, I know. I messed up on that one. What can I say? By the way, I'm glad you got the memo.
Oh, yeah, we're wearing the Gartland Group.
This is the Johnny Cash edition of the podcast, isn't it? Welcome to the Johnny Cash edition of the podcast. But here's the thing. Let's say I'm working for IBM, and IBM does not have a retirement plan. No big deal. I can set up the retirement plan for my home-based business or for my side business, and I can make contributions to that retirement plan. But let me change the facts a little bit, Bernie. Let's say that IBM does have a retirement plan. The big corporation I'm working for does have a retirement plan. Can I participate? Can I double dip, in essence, with the big corporation's retirement plan and my own retirement plan? And the answer is?
Yes.
Yes. How cool is that, everybody? Now you can double dip with your retirement plans.
I'm glad you gave me that softball. That was very good of you.
Yeah.
That's what this is all about. Softball questions and answers, everybody, but listen carefully. By the way, let's talk about that self-employment. The Internal Revenue Service takes a look at people who are self-employed. And one of the things you want to make sure is that if you're self-employed and you want to avail yourself of all these programs, which are allowable, you want to make sure, and I emphasize this because I've been through a lot of audits in the past that people didn't do what they were supposed to do. You have to have your business with the intent to make a profit. And you know, the interesting thing is on the Schedule C for your tax return, it says profit or loss. So in the first few years, I mean, it's acceptable if you show that you had the intent to make a profit and did everything that you needed to do, such as go to workshops, seminars, hire the professional people to help you. Even if you have a loss in the first couple of years, it still is an intent to make a profit. Therefore, you can avail yourself of whatever income you have and have it a deduction.
Totally agree. Totally agree. And let's talk about that. Let's say that I'm working for the large corporation, and I've got my side business over here, and that side business makes $15,000. Let me toss another softball to you. How much of that $15,000 can I contribute of my side business if Large Corp doesn't even have a retirement plan for me?
I am going to take a wild guess, and I think 100%.
100%. I mean, that's a mind blower for those watching out there.
So if you have an intent to make a profit,
Yeah.
and you're conducting your business, and you have this income plus your W-2 income, you can take that money and put it in a retirement program for yourself, your self-employment business.
You're allowed to put in the lesser of 100% of your earned income from that particular business.
$17,500.
Or 17.5. But if you're over 50, which no one here is, but if you're over 50, that would be, you'd have a catch-up of 5,500 additional. So in theory, you could shelter $23,000 in the blink of an eye. And in the category of, but wait, it gets better. If you do things right, you could probably shelter $55,000 a year. So these retirement plans are just absolutely amazing vehicles.
Well, you know what the problem is, Tim, is that here you work. You work hard, whether you're in two different companies, whether you're self-employed or whatever, and you put this maximum in there, and it just sits there and sits there and sits there. You can't do a thing with it. Is that an accurate statement?
No, it is not accurate, Bernie. It is not accurate.
Really?
Really. And here's the thing. We've all been brainwashed that we have to have our retirement plans invest in the stock market or buy bonds or buy a CD. But under the rules for 401ks, we can have them go out and buy real estate if you so desire. I mean, they can still invest in the stock market, do all the traditional stuff. But with the 401k, you can pretty much do anything you want to with that money so long as it's an investment done for the benefit of the 401k. You want to do a hard money loan? No problem. You want to buy a tax lien? No problem. You want to buy the real estate? No problem. The 401ks allow you to do that. Another thing too, Bernie, jumping real fast back to the contributions. Let's tie this back in with our conversation last week. We were talking about paying the kids.
Right.
The maximum I think we could pay the kids for their personal exemption and have it not be non-taxable was $3,950. Now we combine in this 401k element. The kids aren't going to be over 50 and meet the requirements. But how much can they put in?
100%.
100%. So in theory, so long as the kids provided valid business services, that's 17.5 plus, let's call it 4,000. So that's, what is it? 21.5. No, yeah, 21.5. 21.5 a year if the kids provided valid services. 25 a year could be plowed into this retirement plan with no taxes for the kids, and it's a deduction for your business.
And we already talked about last week that, quite frankly, the tax court has decided, and the IRS, agrees that children can work for home-based businesses for their parents. So these deductions and these programs do work. Here's the problem. I have an IRA.
Yep.
And so I guess I can't participate in a 401k, could I?
Oh, sure you can. Even if you have an IRA, you can still participate inside the 401k. And in fact, going a step further, what we can do is take your old traditional IRA and roll it into your 401k. And by the way, if your spouse is a part of your business too, we can roll over their traditional IRA into the 401k. Now all the money's commingled and can be invested together.
Wait a minute. So the benefit of rolling over IRAs into your own 401k is you have control over your own 401k.
As opposed to Chuck having control over it.
That's true. And you can utilize that for other ventures. Is that a correct statement?
You can utilize that for other ventures, yes.
Well, here's another realistic problem. The economy since 2008 is what the term is verstunken. Okay, and a lot of people
What language is that?
That is Gartlandese. Gartlandese. So didn't I educate you on this?
You're from Gartlandia.
I am Gartlandia. And here's the thing: is a lot of people get in problems with judgments against them, or they get problems with IRS, and they get problems with creditors, and they're sitting there going, how do I protect my hard-earned money from creditors? I mean, silly lawsuits. I mean, how many times have you heard people say to you, I got sued and it was so unfair. We see this all the time. How can you possibly, what program can you instill for a person that they can protect their hard-earned money?
401k. It's exempt from a lawsuit. It's not considered, or exempt from lawsuit. If you have to go bankrupt for some reason, it's not even considered a part of the bankruptcy estate, so they can't take it away so long as you did things correctly. And by the way, you got to do things correctly because right now we're looking at that $2 million 401k. The
Yeah.
bankruptcy trustee has hired us to look at that. So long as you do things correctly, the 401k is going to be protected. IRS, if you have an IRS issue and if you set up that 401k correctly, the IRS cannot go after that 401k. So you have some very strong protection with that 401k as well.
Yeah, and it's very simple. You work hard for your money. Make sure you put it in a system that you can utilize that and is protected from government and also from creditors. It's a no-brainer. It's an absolute no-brainer.
It's like what you said about the offshore thing. Why in the world would anybody go offshore? Because what's the benefit of going offshore? Supposedly strong asset protection, supposedly tax savings, which neither one really exists offshore, but that's a different topic. With the 401k, you get tax deductions. The money grows in a tax-free environment, and it's protected from creditors. It just doesn't get any better. And then the gravy on the cake, dare I say it?
The gravy on the cake.
The gravy on the cake, the best part of this whole thing, well, not the best, but just another great benefit of the 401k. Let's say I build up a 401k, Bernie, of a few $100,000, and I run into cash flow problems. Mm-hmm. Can I borrow from my 401k?
Yes, you can.
And what are the tax consequences? If I borrow $50,000 out of my 401k plan, is that generate a tax liability?
It's not a distribution.
It's not a distribution, so I get tax-free money from the 401k if necessary. Can I do that with an IRA?
No.
No, you can't
cannot do it with an IRA.
And that'd blow up the whole IRA. So 401ks, you get tax deductions. They have asset protection. They grow in a tax-free environment, and they're liquid. You can gain access to the money. No-brainer, fantastic tool.
And you just triggered my mind on something. A week or so ago, Tim and I gave a lecture on estate planning, and the thing is, we showed that a lot of television commercials, get this IRA, get this IRA, get this IRA, and you can't do anything with it.
Yeah.
You can't do anything with it. It's being controlled by other people and other factors. You have no accessibility. But if you put everything into a 401k, which you control, there are many things that you can do with that 401k with no tax consequences and protection from creditors.
Yeah, and it's amazing more people don't use these, but we just got to get the word out. That's all. So don't even think about it. If you're self-employed, you have your own business, set up a 401k plan. It's a no-brainer.
Do you think by these podcasts that we're getting the word out?
I'm hoping we're getting the word out.
We're getting the word out because that's our intention, to educate you on how you can control your own destiny. You know, we have an expression here. Mm-hmm. Let us help you put control back in your life and have that control give you a future.
Well, I think we just put the control in their hands, and if they want to set up a 401k, give a holler. Talk to someone who can help you do that. We can help you do that, but if you know someone locally, hey, that's cool too.
Yeah, make sure it's done right, or you may lose. The law is on your side. Just make sure that you follow the steps accurately. So I think that's a wrap.
That's all I've got, sir.
Bye, everybody.
Why are we staring at the camera?
Because camera television always said, stare at the camera.